Remax results. Chuck and Michelle on today. We're going to have special guest Michelle Baldwin with Fairway Mortgage to talk about interest rates. We have not done a live show since February. This is only our second live show of 2022. A lot of reasons for that. Obviously, it's still a busy market. We got other things going on, with kids and family, and done the show less, but sometimes that's good because now it seems like new information as we get going on this. So, like I said, one of the biggest things happening in real estate really over the last few months is the interest rates rising. How's that going to affect the market now in the future? And that's why we have one of our main lenders, Michelle Baldwin, Fairway Mortgage. She's been on the show before. She's going to join us. I'm going to pop you on the stream now, Michelle, and you can maybe give us a mortgage update if you can hear us. Are you having any luck back there hearing us?
I can. It'll be fine. Just fine.
So tell us what's happening with interest rates.
What's happening with interest rates? Well, not much. No big deal. They've only risen as fast as they've ever risen in the history of all mortgage rates, right? It's an unprecedented market. Even the experts don't know. We had a live show, probably 2-3 weeks ago now, and we had top in their industry experts, and they both had slightly contradicting opinions on what's going to happen with them and what happened because of them, and it's just very interesting. So they've obviously gone up. And they've gone up for a variety of reasons, right? It's not just, because of this or, because of that. It's really a unique time. Obviously, things overseas play a part of it. So the war going on right now in Russia and Ukraine have definitely caused some uncertainties. And that does anything uncertain tends to sometimes challenge the market. With regards to just business being down with rates going up. Plays into it. We were just on a conference call prior to this one where our CEO was kind of talking about it as well. And it's just kind of across the board, just heavy increases. So, we have to step back and look at the 30,000 foot view and recognize they are still at really, really low rates. When you look at it and you talk to people that, are still purchasing and selling houses right now, they've gotten double digits. And so to be in the fives, which is where we're at, I locked one in yesterday at 5 1/8. It's still really low. So people just need to not panic. Although the hike was extreme, right? I think that extreme hike is over, and I think we'll still continue to rise, but I think the rise will be much more subtle, and a little bit less scary, hopefully. So hopefully this is just kind of okay, now we can just kind of inch our way up and down a little more.
Yeah. So basically, like you said, overall, my history of doing real estate about 20 years, the rates, for several of those years were higher, not way higher. They probably were not much higher than high sixes, probably is the highest I remember in my years of doing it. Very, very long period of time where they are now, so I would say recent history, they're more normal rates. And then that last few years, especially a couple years, super low rates. That are we ever going to see this again? Was it ever going to go like for a while? There's like, maybe these rates will just stay here. And then this was like the reset that probably could have or should have happened before, or should have never happened, that they were that low. But good for the people that got the low rates when they did. It's good for them.
And a lot of them are now hesitant to sell, right? Because selling looks a lot different now, and buying looks a lot different than it did when they were a few years ago and locked in the low threes and even high twos. Some people have the twos interest rates, which is just unprecedented. So it's very unique, but it's fun. It's a fun market to be in. The Fed meeting obviously is wrapping up today. So a couple of market updates. A lot of folks think that the Fed meeting, when they say, we're raising interest rates, a very common misconception is that also ties into long-term mortgage interest rates. And they're actually completely not tied into each other. So I will get calls, especially when it lowers, right? Oh, the Fed dropped the rate. Is my rate going to be lower? It's like, no, it's not. Unless you are talking about your credit card rate or your car interest rate or something that's more short term. Even your second mortgage line of credit rates, right, are tied to the Fed. But what we really look for mostly, or not me, but economists and the mortgage-backed security itself looks for what the statement entails, right? What the future looks like. They're doing this because, so it's expected that they go up 50 basis points today. If they don't, or if there's some kind of unique comment that the Fed speaker makes, that's when we'll see shifts. So this morning, the market opened up pretty stable, just on the heels waiting for that afternoon meeting announcement. So.
Yeah, so right now, and maybe I missed this, what are you doing if somebody has a purchase agreement today or whatever? Are you like saying we're going to lock you in because they're going higher, or we're going to float it because we're not sure, or what are you doing?
I am locking in everything that I get within 60 days of closing. So if something's closing within 60 days, I'm suggesting a lock, just because there's so much instability in the market. And we do get daily updates. We do get alert to locks or alert to floats throughout the daytime so that we're up to speed on the market real time. But it's just so unpredictable. Everyone's nervous, right? Everyone's so nervous. At the very end, you know how the mortgage companies get paid by the mortgage, the servicers, that's dropped 40%, right? Because they're nervous about the long-term market. And so that's another reason why interest rates have gotten higher, because there's just not any margin on the back end. So there's so many different behind the door scenes that people don't think about, but it's fun. Yeah.
So how shocking has it been for somebody? Now, I don't remember many of our people doing this, but it used to be like the years I've been in real estate, it's the fall and maybe there's not many houses. Be like, I'm going to wait till spring to find a home. They didn't really do that this fall, but there's probably a couple of them. How many of those people literally have died of a heart attack because, I could have had a 2.8 rate. Now it's like 5.2 or whatever. Have you had any of those?
We haven't had a lot of them. A lot of people that say they're going to wait typically don't, surprisingly. They think, well, let me, and I always talk to people and I say, I understand you want to wait till spring. Totally fine. Your schedule is your schedule. We'll be here to do your loan whenever you're ready. But I say, maybe there are some things we can do now to help get you in the best possible position. Maybe you're adamant on putting 20% down, but at 15% down, your interest rate's lower and you can drop that PMI fast because of the heavily appreciating market. Right. So let's time that out. Let's look at it. So I'm typically pre-approving people right away, and then they get excited. Right. And then you guys are sending them their MLS stuff, and then they're getting really excited. And typically they make a move prior to waiting. I have had a couple people, mostly people building. Like, we're not going to lock in. We have a great extended rate lock program up to a year, extended rate lock. And a lot of people opted out.
Nope.
So that was tough. But.
Thanks.
Michelle, you're going to have to ask some questions. I'm returning a text.
Oh, God. Okay.
I actually have something I can chat about.
Yes, go for it.
Yeah. I wanted to talk to folks about this cash guarantee program. I know Michelle's familiar with it. Chuck, I don't think we've had a chance to connect on it yet, but I want to let the world know, because it's really been profound with buyers and sellers, to be honest, because it's just kind of a great deal all around. And what we've seen in the Minnesota market, Florida's been a little bit more unique, but I'll talk just to the Midwest market, we'll say, is that buyers just are not getting their offers accepted. Obviously, that's across the country, right? Because of cash offers, because of more favorable, financing terms. And so what Fairway did is we came up with this cash guarantee program. And what it is we get the buyers pre-approved TBD. So all that's left for their approval is the property, right? So they're gone through underwriting, they're fully clear to close, every check mark is off. And that takes us about 48 hours to do from start to finish. It's not a long process. And then we can attach this addendum to any offer. And that addendum basically says if Fairway didn't do their job, or something happens with the buyer, they die, they lose their job, they buy a $100,000 boat, whatever happens, Fairway will come in and pay cash to the seller for their house to uphold the original contract. And that's huge. Now, if the appraisal comes in low or if something happens, the seller has a choice. They can either continue to take Fairway's offer, which is the purchase agreement or the appraised value, whichever is lower, or they can simply walk away and find a new buyer, and Fairway will give them $10,000 cash just for their troubles. So the beauty of what I'm finding is in the Midwest, the cash offers seem to be a little bit lower than list price. And so a buyer with financing can come in and guarantee that they're either going to provide the financing by them being the buyer, or that Fairway is going to provide be the buyer. And the terms are more favorable to the seller. So they're going to net more money because it is a financed mortgage, right? It's a financed buyer versus a cash buyer, but they're still going to get that guarantee. And it's just been like, we had one where there were over 20 offers and ours was accepted because of this guarantee, and me making the call to that listing agent to explain it. It's a little bit tricky because they think, well, sure, but what 15 hoops do I have to jump through as a seller in order to get it? None, literally none. If the buyer just messes up, makes a mistake, loses his job, whatever, we've done the TBD approval. We will honor that, and they will close with Fairway as the buyer.
Oh,
And
wow.
then usually what happens then is our buyer's agents can turn around and list the house for Fairway. So not a bad gig for the buyer's agents either, if that does happen.
Well, in this kind of market, you have to be competitive. As a realtor, as a lender, that sounds like a good competitive advantage that can obviously help Fairway get more business, but also help the people you're serving. So that's that's definitely a game changer. So probably want to get the word out there more on that. Maybe that's why you're on this podcast, because of our dozens of listeners now.
It'll be fun if these are archived, which I think they are, and
They
someone
are.
listens to this in like 4 years.
For 3 months, and we still had like 30 listens already. In the little window here. Not since then, but literally in the last week or something. So.
Thanks.
And if you share it out on your page or whatever helps you, then we get more listens, and then you get the listens. So
I like it.
So other programs or options that you wanted to touch on, if maybe that's your highlight or your marquee one. Anything else you wanted to share? Yeah,
I mean, that's definitely a highlight. We are still seeing a lot of good success with our extended rate lock programs because people are fearful of what's going to happen in the interest rate market. And we could see 6%. Some people are getting 6% already with less than favorable credit. So that exists out there. But we have a really great refundable upfront fee extended lock program that allows you to extend up to a year or lock up to a year with new construction. And that's even on a new construction 2-time close. So even on the refinance side, because a lot of folks don't do it on the refinance side. So if we're providing just the end loan financing, or if they need to do the construction loan with the refinance, we can extended rate lock both of those up to a year with a minimal upcharge. So
are you seeing any fallout on your new construction deals that somebody was hoping they'd have 3% and now they're at that 5%, or is that in the pipeline, or what are their options if they're
I haven't yet. I do have one out there right now that's supposed to close in September. It's a 1.6 build on a 1.2 loan, and we originally quoted 2.75 on a 30-year fixed last September. I can guarantee you it's over double that now because I was with 10% down. And so that's just, and on 1.2 million, that's not a $50 change to your payment, right? That's several $100 change to your payment. And so they're going to make it work. It's not easy, but it's the risk that was taken in order
sell
to
the second home and the third home and the boats now.
Time to sell. Yeah, sell the farm.
It's funny. Yeah, have you seen a lot? I've seen a lot of of course, down payment assisted people finally getting houses, USDA, VA. It seems like last year for this time we were talking about that, it was basically non-existent. I think the majority of my buyers now, unless they're brand new, are all those people finally getting homes. So.
Yeah, I've noticed it too. We do have a fair amount of people with government loans not being so much blacklisted or tabooed.
Mhm.
I don't know if listing agents are coming around to the reality that they're not that bad. As long as you have a good lender on the other end that knows those types of loans. If you've got someone that's never done a bond loan or doesn't do many USDAs, it's different, right? It's unique. There are things, and not challenges, there's just extra things to the loans. So certainly, I think lenders at this point, I hope you guys are seeing this on your listings, are almost always making calls to the listing agent to let them know their credentials and let them know they know what they're doing and where these buyers are at and that they've been recently, gone through underwriting, what have you. Bond loans and USDAs are the two loans that don't qualify for the cash guarantee program, as well as any contingent offers. So those three are the caveats. But
Yeah, and
Yeah, I
think
know,
also,
like-
obviously FHA and VA rates are a little bit lower. I know they have the mortgage insurance
Yep.
sticks with them. Well, not on VA, but FHA.
VA, yeah.
But I think part of it is now, as far as our listings go, they're still very competitive. There's still a good amount of showings. We have listings all over. So in the more rural areas, or maybe where we're pushing the price range a bit for what's happening in the market, you're not going to get blown away with showing. So sometimes the 2 or 3 offers or whatever it is we get on some of them, yeah, if they're all FHA or one's conventional and 2 are FHA and the FHA is 15,000 higher, it's the seller wants to roll the dice for 15,000 more or whatever it is. Where before, at least as far as I noticed on most of our offers and multiple offers, the FHA buyer, the VA buyer, was typically not first place anyway. Like the conventional loan buyers were first place, so that's why they're not getting it. Or if it's a tie or a near tie, then yeah, there's some factors that can be like, well, we're going to go with the conventional one that's got more down, or feel better about the appraisal. And now I think the reason why they're getting them through is just they might be the ones competing for the house and so on. So.
Yeah, depending on that price point, certainly. I mean, that's just your target market. There's not very many conventional buyers out there in the lower price points, just typically. Sometimes there are, but.
Yeah. And back to your point, like I noticed too on my listings, when the lenders don't call me, I don't take their offer.
I wouldn't.
I got burnt last year once and never again.
Yeah.
If they won't call me, text me, hound me, if their agent can't get their lender to do that, then no chance, because they're not going to respond when I need them to respond.
Yeah, I think it's less than 50% to have the lender call me. I normally call the lender to see if they have a pulse, is basically. And then I had one this week and I was talking it up, really great. I'm like, oh, okay, well, I guess then I feel better. You know what I mean?
Yeah. Thanks for all the info.
She was throwing everything at me.
Yeah.
Those are the best.
Yeah.
That's why we usually try to work with lenders like Michelle. We have a couple of them, and if they have to call immediately. You need to say this is happening, because I don't know. I've just been burnt. So.
Yeah.
So you got to make the more proactive you can be on our end, I think the more credibility you have, right? So when I'm writing out pre-approval letters and sending them to the buyer's agents, I'm asking, give me the listing agent's contact info and let me know right when you send that offer, because I'm going to be calling them as soon as I can after that hits their inbox, so they know what kind of a professional team they're working with.
Yep.
It's important. It's vital.
Yep.
Yeah, are you going to hang with us, Michelle Baldwin, for the whole show, or you got other things to do?
It's up to you. I'm here for whatever you need. If you need to continue to connect with, whatever you guys need.
Well, we'll probably talk a little bit about what's happened. We talked a lot about the interest rate, but just then how it's going to affect. So this will help you how it's going to affect the market. So right now, as we've been talking about that huge jump in interest rates, it really hasn't slowed down the market really at all for pricing. We're still at all-time high prices. It's not like somebody who sold in, I don't know, let's say December, when the rates started to jump up a lot, all of a sudden the house is less now. No, for the most part, I think almost every house in every location is still higher than it was when the rates are lower. Now we're in the spring market, so that's normal. It's an active market. I do feel like there are a little bit less showings, or maybe a lot less showings, than some of the houses, some of the areas, but yet still good competitive offers on them. So right now, if you're like, oh, the interest rates, we're going to slow up the market, it hasn't now. I've been telling sellers, people like, I might list now, I might list in October. Like, I don't know about waiting till October. I think in a general, we have 2 years of good appreciation, right? And even when we had appreciation before them, but in a general year, we have normal appreciation or a little bit better normal appreciation. It spikes in the spring. And then whatever the price was in the spring, it might even be a little bit lower in October, November because of the spring spike. I would think that would happen this year with the rates rising and continuing to rise. So for the sellers, hopefully that leads to more inventory now. Like, okay, maybe I need to sell sooner than wait if they were, because you might be like, why would people wait? Well, some people like to go south for the winter, or they're going to be snowbirds, or they want to enjoy their home during the summer and then they'll move. So that's why people wait and they list and like, hey, I'm going to time it out when I'm moving Florida, Texas, Arizona, wherever they're going. That may not be the right thing to do this year, but I think just in general, if you are fine with the interest rates, qualify, still out there looking, it's now a little bit easier to get a house. So Michelle, what are your thoughts? Michelle Carstensen, what are your thoughts on that? And then Michelle Baldwin, you can chime in anytime.
2 Michelles. Blonde Michelles. Oh yeah, I think for sure. I don't see it like settling anytime soon. Now that might be in 2 months, but like right now with the buyers I have and then what we're seeing and the sellers I have, we're still getting, of course, normally when we list our houses, we list them about in the middle. We don't try to list them too high. We don't try to list them too low. We don't purposely want 100 showings. We want, the 10 to 15 showings and the 3 to 5 offers. So I don't see like it going drastically lower. But again, same thing I'm telling my sellers, like I would not wait till October because we don't know. We haven't known in the last 4 months what the interest rates are doing. We knew the house pricings were still going to go up. But at some point, like you were saying earlier, Michelle, like if you had a 2.5% or 3.25% interest rate, you're probably not selling if you have to go into 6% and buy up, right? Because your mortgage is going to not only be more, it's going to be way more. So you're probably sticking around for another year till next spring to see what happens. So that's
the only benefit with that is that you're realizing more net equity. If you're selling now and you're in the 2s and you go up to the 5s, the net equity that you've gotten from your sale will push down your mortgage amount, right? To hopefully equalize that. I've seen people doing that. So they, bought for 200, 2 years ago. Now it's worth 310, let's just say. And their rates are higher and they're going into a 4 something, but it's about the same because they can take all that cash that they realized and put it as a down payment, or even sometimes paying off other debt to just help their monthly cash flow. Yeah, the mortgage is higher, but we can pay off 3 car loans and, our mortgage currently and still benefit. But I have a question for you guys. So my question or thought is, do you think that the low inventory, are we seeing more? Like, what does the actual inventory look like?
I think the inventory is not enough, but it seems like there's a few more listings, enough to be more of an even flow.
Okay.
But to Michelle Carstensen point on not necessarily with the rates, some people staying in their house longer, or just whether they think about what you just said about the net equity. If people stay in the house longer, we're going to still be at an inventory shortage for a long time, long time, like years. So that's going to keep the market from really going down, because a few people are like, oh, I'm waiting for the drops off like I did years ago. And it's like,
good luck.
Good loans. Like very few people are in terrible loans, and not that nobody goes through foreclosure. People have divorces, health issues, job issues, and there's going to be a few foreclosures here or there. But even those people, a lot of times they have equity in their house so they can sell it. It's not like it's going to be on the market as a distressed property. It probably goes on the market as a, slightly deferred maintenance property that you can sell still at a good price. So there's just people, it's not 2007, 8, 9, 10, 11, where all of a sudden people are just like giving away. They're like, I'm out of here. Like like nobody has to do that unless they bought, 3 months ago and it goes flat and they have troubles, but still there won't be a flood of foreclosures. There's just not
Yeah.
a flood of inventory because people are in a low interest rate. It doesn't motivate me. All my houses, the rentals when I own have good interest rates. Like I'm not going to go anywhere on those. Could I buy another property and finance it? Maybe down the road, but it's just like, those are, I don't, but to Michelle's point, if I like, hey, I'm moving and this is it. Yeah, I have equity. You just, whatever, who cares if you have a 5 interest rate. So
that's a good point, Michelle Baldwin. With the equity and bringing it down. I can use that point now.
Yeah, I mean, there's just a lot more of it than there has been, right? With the appreciating markets, and it's going to continue, yes, but buyers, when they're out buying, their houses are also going to continue. So I work with a lot of buyers in Florida and sellers, and they're just like, we're just going to wait because, Florida, Southwest Florida is the number one, I believe, appreciating market right now in the whole United States. Yes, right? The extremes. We don't have that in the Midwest, but we do in Southwest Florida, and it is what it is. But people are actually still talking about waiting because they've seen those hundreds of thousands of dollars of swings. And I just don't think that's this market. Just like we're not going to very likely see that 2007-8 meltdown with the market because people have equity. People are in good loans. Who would give up a couple $100,000 in equity to let their house go into foreclosure? No one's going to do it.
No,
that's
worst
silly.
case scenario, they sell and go live somewhere, which I, over the past few months, have had maybe 3-4 people that are doing something like that. They got some equity, they can cash out, but it's not their thing right now because whatever's happening in their life. So they're not like foreclosing. They're like, oh, I get 80,000 to leave my house and go do something else instead of foreclosure. So a lot of people don't think of those things. I think the biggest thing, so inventory is going to be low for years, like we talked about. Interest rates are really historically still low. In the recent generation, probably average, like right where they've been on average, if you dialed in an average. So one thing people don't talk about that isn't going to greatly affect the real estate market in the near term, but that would probably be what defaults the market a little bit, not a lot, not a big crash, is so with inflation, real estate's a hedge for inflation, but there's all that extra money that came in the economy the last 2 years. I think they're going to keep it in for another year. We're still in the jubilation phase of the extra money and people spend it all. Eventually, it's going to be where there'll be a cycle of maybe lack of money and tight-fisted on the money. That would overall eventually, I think, trickle down to real estate and real people back in. But real estate will probably be one of the least affected by that. Whereas if you hear anything happening on the market, the economy, it'll probably hit real estate last, even though maybe something else would be like, oh, the economy is really bad. Real estate will get hit last, but it would eventually trickle down. And that's something nobody ever brings up with real estate, that eventually this jubilation of all the extra money will go to not extra money. And then that's gonna.
Yeah, there's only so much money, right? I mean, you hate to say that with the government because they just make more and figure out ways to get into further debt. And that's a whole nother topic and a whole nother podcast. But
and that's literally why even a couple of years ago, I predicted, middle 2030s is probably the next time the real estate market crashes or goes down a lot. And that's why it would go down. Literally a total reset on how money and financing works, and it just be like, I guess you have assets, but we're changing how we're doing this, and it'll be like a squeeze down. There's some politics that would probably want it that way. Some people that would want to overthrow things. Anyway, we're not big into politics here. I'm just saying it's several years before I think we see a big real estate decline. There might be a couple tiny dips because of what I just mentioned a moment ago. But real estate's as solid as it's been because of everything that's led up to this and how people, are in better loans and value a place to live.
And rent prices, it's like with rent prices being where they are, you're either going to see a heavy increase in homelessness or people got to buy because you can't afford to rent. I mean, buying's cheaper than renting these days in several markets. It's crazy.
Right. But you see the buildings going up nonstop, like, and lots you didn't even know existed. And you're like, well, where did that building come from?
Mhm.
And they're all like apartments. It's like, oh my goodness. Like
Yeah.
at some point, like I know they've got to put people somewhere, but wow. That's
Yeah,
crazy.
I think that eventually, hopefully, level off the rents. But yeah, I don't think they're going to go down either because it's just going to be that competitive nature. I don't know where people who struggle to make enough money come up with the money. That seems
Well,
like,
it's interesting because they have to take something away from it. So what are they going to take away? What are they not going to have in order to pay their rent? Are they going to not have a car? So they need to be closer into an urban area where they can get around on foot. And again, in Minnesota, that's a little harder to do, but with a busing line. Or are they going to just not go to entertainment, which we've seen that cut off with COVID, right? Because it was closed. But are people just not going to re-engage on going to baseball games and football games and concerts? And, it'll be really interesting to see what happens, see where people move their money in order to afford to live. I pray it doesn't end up at homelessness, that people actually are able to shift in their finances, but people aren't making as much money as they need to spend right now. That's a scary thing.
It's kind of interesting how I've seen now. I think we're at this point where, like minimum wage is like $10. So say you make $12 to $13, like, hey, you can't pay rent. So I have 3 clients right now, one just closed, that literally are moving in with other families, taking the equity, moving in and just going to take care of their parents. Actually 4 clients, because I think that's like a lot of the trend. I know that in some cultures, that's what it is anyways. But in our American society, like you don't see that as much. And now I've seen that 4 times starting the trend of like, let's sell 2 to go to 1.
Yeah.
So getting the equity out, go to 1, and then like be done, because they're not going to pay the amount of money it's going to take to put their parents in somewhere. They might as well just keep them at their house. So
yeah, that's true.
It's kind of interesting.
Yeah.
That makes sense. So I haven't reminded people up to now, it's on the comment below with your real estate questions, meaning you can comment, we can answer your real estate questions. So always a reminder, if you have any real estate questions, please feel free to ask them. Obviously, this is being broadcast live on Facebook. It's also on my YouTube page, and StreamYard, which is the program I use, allows one more site. So I put it on Twitter. I never do anything on Twitter. So not that anybody looks at my Twitter page, but I believe this is broadcast live on Twitter as well now. And then the replay will go on our podcast, which is the Real Life Impact Podcast, which you can normally search for Minnesota Real Estate Podcast and find it that way. You can go on Apple and some of the other podcast sites, Real Life Impact, save it, and you can listen to the broadcast, go back and listen to some of our other broadcasts. So that's a way to find us and find this podcast online. If you're wondering, or if you're just joining in or got to go somewhere and want to get the rest of the show later, that's how you find us. So we can wrap it up. We don't have to have a super long show, maybe the last 5 minutes for closing comments, thoughts, things that we didn't talk about that you want to get to. So let's start with Michelle Carstensen. What's on your mind that we didn't get to that you wanted to bring up?
Oh, there's not a lot on my mind that I wanted to bring up. We do have a lot of listings still continuing to come on. There was probably more of a shortage in the beginning of the year, as we probably talked about on our last show, but we have a ton, because I know both of my children are now photography for us, which they have been in the past, and they're all over the place. So we have a ton of listings still coming on, land listings, house listings. Chuck actually has a couple lots as well. And so we'd still see a lot of listings coming on. I know some realtors are busier than others. We are busy, but not too busy that we can't help you. But yes, we do see a lot of trending listings coming on and off the market pretty fast within a week. I think most of our properties sell if they're in the areas that, are highly populated. Within a week, they are off the market. And that hasn't detoured, the interest rate has not detoured our people from selling and buying. More of my buyers are now through. I've had buyers under contract for about a year, and I think I have one left that has not bought. The rest have now, yay, got through. So
it's a good feeling.
So to piggyback off that, I think we now, as of today or whenever you get the Browerville, Motley, wherever those listings are, Michelle, I think we actually have 8 lot or land listings. Only one of them is probably under an acre, several acreage listings, raw land, which raw land, it's a little bit, they sell quick. We've had some buyers buy land that they came on the market, we made an offer and gone and sold right away, almost like a house. Land takes a little bit longer, typically because it takes longer to get people out to them. They're out farther. Also, a lot of the sellers want the absolute highest price possible they think they can get, and you're not normally going to get multiple offers bid up on land. So most sellers, because we don't, club them over the head and make them go with our pricing on it, want to list their land towards the top of the price period, price that it could be. But they're right in range where most of them are close, where somebody makes an offer, you can negotiate it out. So I guess that's one that you can actually, land listings sometimes are ones you can actually offer less and negotiate on, like old school real estate, not like a house where, almost everything, I'd have to think a little bit, is still selling at or obviously well above market with multiple offers. So that's just what's happening on those. Michelle Baldwin, what else do you want to share?
It's just really good to hear that stuff's still moving. From the real estate side, that's awesome. We've obviously seen a pretty steep decline because the refinance business has completely dried up. We were more of a purchase-focused business model anyway, so it really didn't have much of an impact on us. But, there's definitely past clients that we were able to help last year that obviously don't need it this year. Yeah. So
is anybody refinancing?
No.
I think I heard somebody like, I'm going to refinance. It's like, you're refinancing now? Like why would somebody refinance now? I'm sure there's a reason, but what would it be?
The only reason, good example, I have somebody that's wanting to buy a second home in Florida, and they're in that 300 to 400 market, almost all cash. You can't even get an offer entertained if you're doing financing. They happen to own a farm in Wisconsin worth like $825 and they owe $100 on it. It is actually cheaper in the interest rate market right now because of the Fannie Freddie changes with second homes and investment properties. They had been at like 7.5% with 20% down on a second home because it's condo. And now they can be in the high 5s, and get the cash out of their primary residence and pay cash and be in the market, be at least a contender for that. So, and then certainly the normal stuff, we get divorce, got to get somebody off the loan. Parents don't want to be the co-signers anymore. They got to get off the loan. Almost all conventional loans are not assumable. And but although I am seeing a little uptick in the assumability too, like people inquiring, can I assume my loan or can I have my loan assumed? And on the government side, you can in most circumstances.
Good point on assumable loans. We talked about people maybe not selling because their interest rate, but there are people that have an assumable loan in a house that has equity that they could sell that basically they just have to qualify for that loan, right, Michelle? So somebody could actually get a 3% FHA on somebody's loan. That would make their house maybe even a little bit more intriguing for a buyer,
yes.
Correct?
That would help it. That would be a sweet spot selling point for a seller. The challenge is that the buyers are still going to have to make up the difference and they can't do it with a mortgage. Right. So if you have a $300,000 loan balance and you're trying to sell it for $350,000, the buyers can assume that $300,000 mortgage, but they got to come up with the $50,000 to give to the seller. So that's the caveat in an appreciation.
If they bought it last summer and there's only $10,000 to come up with.
Yes, that's a beautiful example on why you would do an assume. And VA loans don't have to be assumed by another veteran; they can be assumed by a non-veteran.
Wow.
So that's another thing most people don't know about. But we can help people out with assumable stuff.
I'm learning today.
Yeah. I'm all full of
learning seminar.
Yeah, it's fun. It's a fun market to be in. It's fun to play. I will say a lot of our mortgage people didn't have to do a lot of selling. Mortgages are just coming out of the skies with the interest rates being so low. Yeah. And now it's back to it. And we'll probably see a 40% decline in originators doing business this year. They'll just get out of the business because they don't have what it takes to actually sustain themselves in a purchase market.
Yeah, I see that in realtors too.
Yeah.
There's a
You'll
lot of
just
new
need
ones
to,
coming in, but good luck staying in.
yeah. Yep. Exactly.
So-
It's not a great time to get into it unless you really want to learn the fundamentals. I got into the mortgage business in 2005, but I started selling on my own in 2008, the summer of 2008. And for those that have been in the business long enough, it was not a great time. My first rate I locked was 6.875 on a VA purchase. And I'm telling you, I had to grind. I worked 10, 12, 13-hour days. I'd go to clients' houses, and as a mortgage lender, you never do that. People will laugh at me, but I did it. I did the extra things to get the job done, and those fundamental principles are what's going to keep our team thriving. And, if you started in the business a couple of years ago when you don't have it, I mean, you might have it. Don't get me wrong. People have it, but you've got to know how to pull it out right now and put on your sales hat and get to work.
Mhm.
Yeah, and same in real estate. Even that, I think obviously you're affected by the not many refinances, and maybe there'll be less purchases. I mean, our amount of listings we've taken year to date are up a decent amount. I think our sales and volume are up a little bit. Like I know I'm ahead of last year's pace on my end by a decent amount. It's been grueling though. It's not like it's not grueling, like literally a grind. And part of that is I got extra stuff I do. Like I coach my kids' basketball team. So there's like literally no breathing room, but it's been going well, a little bit smoother lately. There's always a little couple things here and there, but it just seems like I think right now what the rates do going up, it kind of washes out the people that just are tougher. Now you got people that really want it. They're like, well, if I'm going to buy it, they need to want it, compared to before. We had a lot of people like, I'll just kind of waste your time and be a jerk about it.
Yep.
Yep.
Tire kickers.
Yep.
That's why Michelle's buyers are all under contract now.
Yeah, because they actually stuck around. Yeah.
So, but overall, I know just in the short term, I think Michelle said next couple months, I mean, seller's market, it's going to be there yet, but there are buyer opportunities. Probably don't want to wait for the rates to go higher, which it sounds like they're volatile, and with everything happening in the world, they could. Also, it is a little less competitive. You could get an FHA loan through, and we don't know what 6 months to a year looks like. If you're not somebody who's real well versed in economics, finances, real estate experience, or listening to somebody who doesn't have experience, that's not who you should listen to. You want to talk to, when you have a lender, you want to talk with somebody with great experience like Michelle Baldwin. That's why we're doing better year over year with the Carstensen team, because people are like, oh, they know what they're doing. They do a lot of business. We can handle situations that other people can't help. Every once in a while, I get the email like, my cousin or brother or sister's getting into real estate. I'm going to use them. Totally understand. Like, obviously, if a family member gets in real estate and you love them, you're going to use them. That's a lot of our business, too. Started off people that knew us. But it's going to be difficult for those people to get past just helping a couple people, because of all the changes, not only in lending, but in real estate, all the distractions of the world and all the distractions of the next shiny object that for the most part, I do very similar to what I've always done, with a little bit of add-on here or there that makes sense. And it works. How do you know as a new lender, as a new realtor, what works? It's challenging. So it's not all glorious. Like, I think people think, it would be great to be a realtor.
It's amazing. No, it is really
job
good.
Ever.
Yes. I mean, I don't think I'd do anything else right now. Maybe if it landed on my plate and I was like, oh, maybe. But yeah. And Michelle, you lend in every state, right?
Yep.
Yes.
All 50 states we can be in.
Yep. She can lend in every state. Doesn't matter.
Sounds like Roxy wants a walker.
Definitely wants a walk. AJ's definitely not taking care of Roxy, as you can hear.
That's Roxy, by the way. Roxy the boxer in the background.
Yep.
Making a cameo appearance in the background.
Birthday girl. She just had her birthday.
I know. She's turned 5. She's so old. I remember when Michelle took care of her when she was in diapers. Yes, the boxer was in diapers.
I've never had a female dog in my life, and that convinced me to never have another one.
Yes. Yes, that was very nice of you. Roxy, stop.
I'm playing with my banners to end the show.
Oh.
All right. So Michelle Baldwin, Fairway Mortgage, thanks for joining us. Great info, insight. This will be one to, if you just tuned in for a second, to re-listen to, rewatch again. Michelle Carstensen was able to make it. Stacy was going to be on. She's not on. She's getting a little work done. And I'm normally always on because I have to be on because I'm the one who has the account for this.
It's your show.
Yes. Great information, Michelle. Thank you for last minute joining. That's how flexible this lender is. I like text her and 10 minutes later, she stops her workout and gets on this call. So,
well, thanks for having me. I hope it was helpful, and I learned some things too about the market. And so I really appreciate the time.
Mm-hmm.
All right. Thanks,
awesome.
everybody. Thanks
Thank
for
you.
watching. We'll be back in a month or 2 or 3 or whatever it is. We'll see you again sometime.
Bye.
All right. Thanks,
Bye.
everybody. I gotta figure out how to end this on the